Well, welcome everyone to the Trader Pulse podcast with your host, Matthew Pohl here. Got Todd Tolman this morning.
Good morning.
Glad to be on. Let's go ahead and jump up, get our disclosure on. Today, we've got a exciting morning. We're stacked with a lot of exciting things to talk about. It's been a really interesting week in the markets, and guys, there's just so much stuff evolving every day that if you're not keeping your pulse on this, it might take you by surprise. I would even say don't not check in even when you go on vacation for a week, because you might come back and feel like, oh my gosh, the world changed in a week. So here's our disclosures, guys. Let's go ahead and get started. Todd, I'm going to let you go ahead and kick things off. What you got for us?
You're going to let me go.
Yeah, I want to see what you got.
Yeah, all right. So I'm going to have to share a whole screen here.
Okay.
But just tell me if you can see that okay.
Yeah, I can actually really well.
So can you see this document okay on the left?
Yep, economic numbers for USD.
Yeah, hopefully that's big enough for everybody to see. So I have been following this all week, and I thought, you know what, it'd be really nice to have a visual of everything that's happened, because it's nice to see everything together. If you're just following this day by day and you're not connecting the dots as you go through the week, it can be a little confusing. But the high points, I'm just going to hit the high points. You can go to like forexfactory.com and click calendar, and you can get all this data. But the manufacturing prices on Monday came in higher. So as you know, and green means that it's positive for the dollar. So why is that positive? The prices are going up. I want prices to go down. But apparently, economists believe that if the dollar or if prices go up, that means the dollar is getting stronger. Okay, so that was a positive boost. And then on Tuesday, the jobs openings came out, and they were actually lower. So there's less job openings that are actually being created. And then along with factory orders month to month being a lot lower than they expected. So suddenly that's negative towards the dollar, right? So how do you put all this stuff together? And then Wednesday, an interesting data point came out that I thought was really strong. And that is the ADP non-farm employment change. Was expected to come in at 148 new jobs, but it came in at 296. That's huge, Yeah,
right.
To say it like Trump, it's huge. So what happened on the chart, you go on the chart, and right here is where the announcement took place, and it's nothing but crickets.
Right.
I mean, the euro just kept getting stronger all day, which I found really, really interesting. All right, so now that takes us to Thursday. So on Thursday, the employment claims came in about where they had predicted at 242, but then your preliminary non-farm productivity kicks in from quarter to quarter at a minus 2.7%. Okay.
Huge.
So when productivity goes down, the dollar gets stronger? How does that work, Matt? So I was thinking about that, and I'm kind of playing with you, but you got to think about it in terms of if you're getting paid the same amount per hour, and suddenly your productivity goes up, that means you're working more for the same amount of money.
Or you're using AI.
Yeah, but the point is the dollar's stronger because your productivity is less.
Yeah.
Anyway, so if you go to the chart, that number, along with the labor costs going up 6.3%, suddenly everybody's thinking, you know what, maybe the dollar is stronger. So you can see right here that it took a nice dive on Thursday morning. One thing I want to point out, Matt, this is kind of a sidebar. This blue bar you see here is where the London market actually opens up about 1 a.m. in the morning Mountain Time, 1 to 2.
Nice.
They seem to know something, don't they? They seem to know something's going to happen.
I think
So
they're
it
just
pushes
awake.
low, and then it retraces, and then New York opens, the announcement comes out, and then it pumps down again.
Yeah, it's just our guys haven't shown up to work yet. Our
I know, but
exchange.
London seems to know what's going to happen.
Yeah.
Anyway,
Yeah, I think our guys do also. There's a lot of insider stuff that's being circulated. I would even say that the data that comes out in these forecasting and actual tools are pretty stale,
yeah,
and that there are people that have tools far more powerful that are getting closer to the actual, and they change every day. And so, yeah, I bet you're right. I bet someone woke up and they knew the actual was going to be higher, or was going to be there was a higher likelihood of it being higher than what it was.
right. Well, we both know that us little guys aren't the ones pushing these prices.
Right.
Okay. On at least on Wednesday and Thursday, you still got the big players in the market. There's plenty of volume. So, when London moves that well on a Thursday or a Wednesday, or I guess that's a Thursday morning, that's actually big news, because the big players are actually moving the market at that point. And they moved it all the way down to 1.10, $1.10 or $1.10 USD to a euro. So that was a pretty big drop. And then Fridays are a little different, Matt.
Yeah, I'm interested to see your take on how the dollar responded to today's announcement.
Yeah. So you can see what's going on right now. We got a live.
Yeah, zoom in on the last 24 hours so everyone can see the last two lines.
Yeah, so I can expand it like this.
Yeah, I like that. There we go. So here's today, guys. This is this morning.
So London opens up about 1 a.m. Mountain Time, and I don't know, whatever time zone you're on, it's about 1 a.m. Mountain Time, this blue line. And they seem to know something's happening again. Now here's the problem with my theory, and that is that most of your big players completely stay out of the market on the non-farm payroll announcement. They can't afford to be in the market when there's so much volatility.
Too much risk.
And so your big players are typically on the sideline. So these movements you're seeing are the little guys. Okay? Keep that in mind. You can learn to trade the non-farm payroll if you understand this. So if you go to the left here and see the chart, so the average hourly earnings came in, the report came in 6:30 this morning.
Much better.
Yeah, 0.5. So hourly earnings are up, which is positive to the dollar. Non-farm employment change came in huge. It was
better also
253, just like the ADP report came in when nothing happened. And of course, unemployment rate has dropped 2 points, right, to 3.4%. So that's real positive to the dollar. So certainly you got a huge move that took place this morning. It's not as big as I would think it would have been. I'm going
to show you why.
If you look at the first 15 minutes, it dropped 427 points.
Jeez.
After 60 minutes, it had almost retraced 50%. And then at 2 hours, it was only down 27 points.
Yep.
But now guess where it is? It's above the announcement now. So if I draw a horizontal line real quick, right here, here's the announcement right here.
Almost a full retracement.
Well, actually, let me just go to the 5-minute chart. This will be better for everybody to see.
And by the way, Todd's using our charts right now. This is GreenChart's charting.
Yeah. So here's the entry. So this line right here is 6 a.m. So 6:30 is going to be right here.
Yeah, there was a lot of money to be made this morning if you were trading that announcement.
Yeah, so there it is. So it's completely retraced to the point that it entered. So it's up. If we use the measure tool, it's up here. Approximately.
I would call this, if I were to explain this to our audience, I would call this massive drop and an emotional drop. And then logic started kicking in slowly thereafter.
Yeah,
And
it's
I'm
only
going to
6
actually show you some charts that I think other people, after they put their short trades in on the euro, they got their thinking caps on and were like, oh, actually, this isn't as good as I thought it was.
Well, you got to remember, the big players are not playing on Friday. So when something moves so far down like this did on a Friday, it's going to bounce back almost every
Yeah, it's
single
emotional.
time.
Yeah, your institutional traders are typically out. They're not
Yep.
risking the volatility right now,
Yep.
unless there's some insider track that they think they're trading. I would say most of this was emotional. Most of this
Oh,
was
yeah.
Reactive to the announcement.
Yep. Anyway, that's the recap of
That's
the
great,
announcements
Todd.
this week. Yeah.
Yeah, that's great. Let me share something really quick. If you'll jump off share screen, you're gonna have to enable participant sharing.
Let's see. So let's see. Participants. Where do I do that? Just
You click
right
on.
click on you.
Yep, exactly. Hit more.
Sorry, I'm not.
I can reclaim the host too.
I can make you the host, right?
Yeah, I'll just do that.
I just made you the host.
So I want you guys to see this. This is all in with job, because today was a big day in jobs. You're going to be hearing lots of news announcements, lots of headlines with this. And I just want you to have your guys' heads screwed on straight here. So can you see this okay?
Yeah, it looks great.
So this is from Fred. This is the labor force participation rate. And nowhere does this announcement ever get talked about. It's something you have to go dive into. And I just want you to see that we have a massive problem in the US around participation. This chart goes back to peak. So I took it from peak, which was during about the 2000s. We had the most labor participation that we've ever had in this country, meaning the most amount of people per capita, like, you have 100 people, we had 67 of them participating in the workforce. Well, you can see, you go to 2020, and guess what that drop was, right? That massive cliff, that was COVID. The rebound was all the stimulus, all the stimulating we did. And we're just trying to climb back to where we were pre-COVID, guys. Like this, we're not even there. And if you look at the very, very end, that's April, the very, very far right, there's like that little blue line. Guess which direction it's going? It's going perfectly sideways. We've had no increase in the labor participation rate. So who's going to fill these jobs? Who's going to sit in them? It's the same people that are already participating. We have no increase in participation. And so I think if this continues, if we continue to have increase in job demand, we're not going to have people to fill those seats. And so I actually am predicting that the labor participation rate is it's actually going to drop, because we have some things happening in our economy that's actually going to start lowering job rates. When income for a job starts to drop, the participation rate even gets lower. And so we're doing nothing to help stimulate participation right now. People after COVID got tired. People retired early. They didn't want to go back to work. A recession is typically the reset for participation. Recessions actually help get participation up. We saw that after the last major recession we had. It caused participation to go away because people had to go back to work to survive. And it stimulated the economy, but it took us a long time to get there. While I get this other one up, what are your thoughts on that, Todd?
Yeah, well, the participation rate affects the unemployment rate as well. So you can't just look at the unemployment rate. You do have to look at the participation rate to get the full picture.
Right.
Because if nobody wants to work and the unemployment rate goes up, it really doesn't mean anything, right? Because people are just, they don't want to work.
Right.
And so, as claims go up, a good number of those people maybe have decided they don't want to work.
Yeah. So here's another way of seeing this, and I want to share this. The data you actually shared Todd, here's the chart. So here's actually the chart over the last 2-3 years of all employees, non-farm payroll. Like this is thousands of jobs change, and it happens month after month. We get this report every month. And so, yeah, there's this little spike that we had, from last month to this month, from, April to May.
Right.
But if you actually look back into May of last year, April, May last year, we had the same spike, and you can actually see the curve is about the same. We'll go into June and July, have these little climbs. And then what happens when we go into the fall, into winter, you typically get this massive decline. And this is non-farm. So this is taking out all of the seasonal jobs that typically come in over the summer also. So I don't think we're out of the weeds. I think the market overreacted to this, like we saw in the actual market. We saw this massive drop, and then people kind of did their research and went, oh, maybe this isn't as good as we thought.
Yeah. Well, I mean, you look at the euro right now, it's going all the way back to where it started.
It's over retraced, right?
Well, yeah, but the thing is, it's almost got back to the point where London opened this morning. So, I mean, it was completely emotional. The fact that we created more non-farm payroll jobs, or the employment change was greater than we anticipated, isn't convincing everybody that the dollar is really that strong.
I want to show you this, since we're talking about jobs, and I would completely agree with you, Todd. And I would also emphasize to our traders and listeners that if you're doing any type of robotic trading, any type of systematic trading, you'll find, if you run an analysis, like a full quantum analysis on your trading, that trading during these major announcements typically negatively impacts your results. So just a tip for those of you who have a system or strategy, take out these major announcement times and windows and watch how your results actually will likely improve. But check this out. About jobs. Look at this headline. I don't know if did you see this thing that IBM put out yesterday?
Yeah. 7,800 jobs are going to go away.
Yeah, and this is coming from a tech company, right? So this is a company that understands AI on a very large scale. Typical industry, like your medical industries, like anything that's non-technical or technology related, they're not in AI, just like we talked about. They're not Google, who's going, what's everyone freaking out about? They're seeing the world through this lens. IBM is seeing AI as a way to replace 30% of its back office jobs. And their CEO is ecstatic about it. It's almost 10,000 jobs that they're talking about removing in the next 5 years.
Yeah.
I actually think it'll happen sooner than that, as we're seeing how exponential the advances in AI are for just the individual. But this brings up a really interesting point. Are the data points that we're using to measure the market still applicable? Because we go in and we look at things like unemployment, and does it even matter anymore when you can have less employees getting way more production, which would be way more GDP? AI, in a way, may be our saving grace. It may be the thing that saves our economy, but really hurts a lot of individuals that have jobs that just merely aren't going to exist ever again.
Yeah. Yeah. And so as we saw earlier, when we were looking at what were we looking at? The productivity, the non-farm productivity going down. So AI is going to help the productivity. So if productivity goes up, that's actually bad for the dollar. Right. So I think the euro is going to continue to get stronger through the year because of AI.
Yeah, it's a fascinating balance.
It doesn't make sense to me when I say that.
I know.
I would think productivity would make the dollar stronger, but that's the way they measure it.
Yeah, right. Exactly. It may be something that gets recalculated over the next couple of years. I would say that most of our economic tools, and I even include a lot of the ones I use to make trades, are getting very stale. They're imbalanced. They're a tool that, frankly, just with all this new technology that's coming out, isn't going to be relevant in the future. And the stuff that the feds are using to increase interest, which, by the way, this is scary news that came out today. To have these extra jobs hit today like they did, do you think the feds are going to not do another rate hike?
I don't know. I mean, they got to look at everything, but I mean,
But they don't. They use
that's
old tools. They don't do that.
yeah.
They're not using.
They're afraid because I don't know. They're afraid because more people are working, that there's more money circulating through the economy, and that's going to drive prices up.
That's right.
Because there's more people. I don't know. There's more people bidding for the limited supply of goods, and so the prices are going to go up.
Right. Yeah. I mean, these.
Yeah. So
and inflation's not over. I mean, we're still at high inflation. Like, we still got a lot of work to bring it back down to 2%. But it's like, how do you? I don't think they have the tools anymore to do that. I used to
credit
believe.
is tightening. So here's the problem: you can have a job, but you can be horribly in debt. So you got to have a job so you can pay for those credit card bills, right? But at some point, you know, even though jobs are being created, that doesn't mean they're out spending.
Right.
They're just paying their bills off. They're paying back their credit cards. They're not going on vacation. They're not flying or buying a new car. They're paying their bills off.
It'd be interesting.
I don't see this driving prices up at all.
Next week, we should do an analysis comparing consumer credit and debt.
Yeah, I mean, that would be interesting, actually.
Yeah. I think that would be really a key takeaway in terms of like where the markets are going. One more thing before we get off this topic, I just want to show you this, see if you saw this. I had this shared with me last night from one of our state representatives, and I actually thought it was fascinating. Like, this is a fascinating. I found an article on this. It talked about Sir Patrick Vallance. This is someone from the UK. And this is all about AI, like all the concerns that are happening, all the advancements in technology. And Sir Patrick said the AI could have as big of an impact on jobs as the Industrial Revolution. And I really love this. I wish I came up with it. I had like this analogy about how AI is the new Napster effect, meaning the disruption in IP, the disruption in patent technology. We've basically given the public a way to replicate IP and patent technology on their own devices that no one would ever know that they violated some IP. And just like music got shared through Napster for free, it radically changed the whole music industry. I'm saying AI is doing that now with the technology, the SaaS and subscription models of technology in people's businesses. But aside from that, Sir Patrick came out and said, he's seeing it through this lens, but he's saying this might be a disruptive, positive and negative, like the Industrial Revolution. And if you guys remember, if you look at charts from an economy standpoint, pre-Industrial Revolution, it was pretty rough. Like, we had to go through a major reset before we went through that revolution. Todd, what are is this guy way off base, or do you think?
I don't know. I mean, the Industrial Revolution, what it did is it pulled farm workers into the city because they could get higher wages by working in a factory than tilling the ground. But we're in a much different situation now than they were back then. I mean, Industrial Revolution's been heavily documented. The history's sound. What is it that all we're going to do here with AI is dislocate jobs, because it's not like you're going from the farm to the factory. I mean, you're already in the office and you're just going to go home.
But I've already said this.
So where do you go if you're not going to work in the office? Where are you going to go?
Well, it's a different shift, right? You'll still be in the office, but the revolution, like I've said already, is like, if you're not using AI and you don't get caught up by this year, you're going to be out of a job in 2. Yeah. And that's literally what the Industrial Revolution did. It was like, if you don't move to the city, if you don't make this shift, then from an income standpoint and a survival standpoint, you won't be relevant. Like you won't matter.
The Industrial Revolution created tons of jobs that didn't exist before. But the problem is AI is going to destroy jobs.
Well,
they're going to create new jobs, but it's not going to create jobs at the rate that people are going to lose their jobs.
It's going to create jobs.
This is different.
This is I want our audience and everyone to see it through this perception. It's going to create tons of new jobs.
Not as many as it's going to destroy.
Right. No. You got to hear this though. Hear it this way. You have to think of the jobs like this auto agent that we deployed. An agent is now a worker. It is an employee in a sense. And if you are someone who knows how to leverage that, you're now a manager of multiple employees. But guess what? You don't have to pay workman's comp for that employee. You don't have to pay for Social Security for that employee. You don't have to manage their time. In fact, you can hit send and they'll work 24 hours around the clock. And so I think we've created thousands. We're going to create probably hundreds of thousands of new jobs, and they're just not going to be people.
Yeah, and they're not going to pay very well either. The thing is, the existing job, the people that learn how to use AI, that have nice, cushy $150,000 a year jobs, those are going to go away. They're going to be able to hire an $80,000 a year employee to do the same thing you're doing for $150 because of AI.
Probably.
So I think wages. I think wages are going to come down. Powell's going to get exactly what he wants, but it's not by anything he's doing.
Right.
Again, it's because of technology and efficiency that wages are going to come back. That wages are going to retract. Yeah.
So this is such a good point, anyway, Todd, that you're leading into. This is why the markets don't make sense right now. This is why people are going, well, if everything's so bad, why is the S&P 500 so high? Why is the NASDAQ so high? It's because companies are going to get more for less. The population's going to feel the squeeze, and these companies are just going to become cash cows.
Yep. And workers are going to be expected to do more for the same amount of money.
Yeah. So I would say I actually did a model on a board the other day showing like the wage gaps and how there's been over the last 100 years this pressure between getting rid of the middle class and this gap between the rich and the poor. I actually predict that this will take a 30% chunk out of the middle class and throw it into the lower class.
Ooh.
And the elites will just have that much. This push to who actually has the money is just going to get smaller and smaller on the top. And you're going to have this little middle class, like the white collar workers, the people who actually matter. About 30% of those workers those jobs are going to get eliminated. And then where do they go?
Knowledge workers.
They're going to have to go do services. They're going to have to go do, basic work that they weren't used to doing. And white collar is going to turn blue. 30% white collar is going to turn blue collar. That's my prediction.
Wow. Yeah.
I'm
not going to argue that.
Yeah.
Yeah.
So buckle up, audience. Get into AI or get ready to start using your hands.
Yeah. Well, my son works in the trades, and that's actually a good. We might want to have a discussion on that another time. But I think people in trades like heating and air conditioning. If you can fix a roof, if you can fix a car, I think those wages are going to go up.
Yeah, I agree.
I think there's a tremendous amount of opportunity in those trades. Yep. And that's what my son's in. That's what he decided to go into. It's hard work. And as you get older, it's harder. But I think there's great opportunities to start businesses in that sector. If you're willing to work harder, there's always a job.
No question.
So, anyway.
Yeah, good thoughts. All right. What else you got for us?
That was the main thing I had prepared for today. It's just those discussions on the jobs mainly, in the employment. But
well, let me jump over then. If you're okay with this, I'd like to transition over to banks.
Okay.
So I've done something really cool, guys. So tune in here, and for those of you who are live, you can check this out. I've got a spreadsheet that I'm going to actually share with the public. So here's this spreadsheet can you see this whole thing, Todd?
Yeah, it looks good.
Need to kind of change the size a little bit. There we go. Here's the QR code. So you can actually get on here and get viewer access to this, make a copy of the sheet, and then play with it yourself. This is a list of all the major banks. I think I put, let me see how many I've got on here. I've got 186. So there is actually more than this, but after I started getting to like 186, I was like, the market cap is pretty small. I'm not going to do this anymore. But let me just kind of break these out to you. And I'm going to do, first thing I'm going to do is I'm going to show this to you guys based on market cap. And so this is smallest to largest. So you can flip this, right? This is the smallest banks I have listed. You know, you have this NBHC National Bank Holdings. Who knows who they are, right? Like there's just so many of these small banks. I don't know who they are. So you may not search it this way, but if you flip it from Z to A, you'll see the largest, right? And these are largest by market cap. So
these all banks matter? These like the big banks too, or just regional and small?
No, this includes big banks.
Okay.
Yep. So if you're looking at it from this angle, I think that's valuable. Let me go back to if the way I've got it in now, you'll recognize a lot of the major banks, US banks. So you've got like WCF, BAC, which is Bank of America, JPM, which is JP Morgan Chase, you know, Truist, First Horizon, Citigroup, US Bank. One of the fun things that I like about this that's helped me is you can actually search by return. Like who has had the best return of the year and who's had the worst. And then you can start going in and doing dives. So for those of you who are traders and you're looking for an opportunity in the market, whether you want to short banks, which I've done some of that this year, or you want to buy banks, which I haven't done any of that this year, but I'm looking, the PE ratios are actually starting to get pretty attractive on some of these banks. You'll know where your best buys are. So go in again. Here's the QR. You can take your camera, get the link, and then copy it to your computer. But if you want to just follow along with me, or if you're watching this after we go live, one of the things that I found really interesting is this year return. So you can click on D, and you can do an A to Z on this, and look at who has. And I was actually I was downtown Salt Lake with a friend yesterday. And he mentioned some of these banks, and I was like, what? Like Pacific West is the worst? I've seen announcements, I've seen news on certain banks, but some of these became really surprising to me. Who's had the worst drops year over year? And this is to date, by the way. This is updated data. PAC, guys. This thing looks awful. And Todd, if you actually could pull some charts up, if you see some of these that you like, I would love to pull a chart up. The one that really shocked me is Zions, and more so because Zions is a Utah founded bank. They've got multiple regional banks in California and other states that are like California State Bank is actually a subsidiary of Zions. But these banks, look at this year over year.
Yeah.
60%, guys, 65%. I can change this too, and you can do this also, but that's what this means. 0.6 is actually 65 or 60%. This is huge. These are massive drops. So what's the benefit? Why Matt, show this to me? What are you looking at? Well, if things shift and we get the economy under control, we stop the moment that we stop lowering rates and we let things go sideways, or we start adding QE, which means that we start actually lowering the interest rates. You want to be right in front of that, buying banks. And you want to be looking for the ones that have the lowest PE ratios. And you want to get to know who the managers are. You want to get to know who the CEOs are. You want to understand their allocations, like what percentage is in commercial, what percentage is in residential, how are they lending? How are these banks like working with the public, and where are their assets allocated? Because there are going to be some killer buys in the market, and everyone knows, when do you buy? Well, it's when there's blood in the streets. Now, I want to emphasize this topic also. Why does it not feel like there's blood in the streets? We kind of have this weird agreement with the news that they don't want to say things that will cause a run on the banks. It's kind of this interesting pact that they have. 2008, we saw a run on the market so bad that they had to actually shut the market down to like calm things down for a moment. And so the news kind of knows that they have the power to create a run on the bank. And they're actually doing a really great job not hyping how bad things are with banks right now. You see the headlines, but they're not trending. We kind of got over it after, we saw Silicon Valley Bank go under. And then after the next bank and the next bank and the next bank failed, we kind of just stopped talking about it. Well, there's a couple banks I'm watching. I'm not going to share who they are, but there's a couple banks I'm watching that are on that list right now. I think we're going to see some more bank failures in the next couple of weeks. And two, we have some really strong banks that don't have these problems, that are just getting hit because the industry as a whole is getting hit. So if you understand like the Warren Buffett style of trading, which is about value, it's about buying value. Right now, guys, there are some great buys in banks, and you got to be careful because you don't want to get into one that's going to go out. But like, as the dust settles, if you're going in or buying into a bank that you trust, you might be at the bottom here real soon. You might be very shortly at the bottom of this thing. I don't think we're going to see 3/4 point rate hikes in the next year. I don't think we're going to see 0.5 point rate hikes in the next year. Do I think that we're going to have 1/4 point rate hikes? Yeah, based on today's data, I think my prediction is we're going to have another 1/4 point rate hike. I don't think there's anything that you can do to get Jerome Powell and the vote to shift that. But one more 1/4 point isn't going to make that big of a difference. Yes, it's likely going to cause a couple more bank failures. But if you get into some of the ones that have higher market caps and not as beat up returns, obviously it'd be great to buy PacWest and they just like resurrect themselves and go like full circle. I mean, they had a 90% drop. That would be an enormous buy to jump on a climb, but they might, PacWest might be on the verge of falling out. Same with First Foundation, Metropolitan. I mean, these top 6 right now I'm watching, and it's like, where are they allocating their resources? Where were they giving loans? Are the CREs too high right now?
Look at the earnings
I wouldn't
growth
want to invest in one of these banks.
On all those banks, Matthew, you have highlighted, the earnings growth, if you go to column H, is extremely high.
Right.
So don't let earnings suck you into a stock.
Right.
Because you really, earnings are great, but you got to go look at the bottom line. Look at where they're investing their assets. And another, book value is always good to find. And you're not going to find book value in an income statement. You got to go to the balance sheet. And you want to look for, if it's basically, what is a bank worth if you just took all its raw assets and took away all its debt? What's left over? What's its actual book value? If you had to sell something at a fire sale, right? If you have to sell the bank at a fire sale, what is a buyer going to be willing to pay just for the assets?
Right.
And we know that, I think Goldman picked up a bank recently.
JP just picked up
for close to book value. So if you can look at the book value and a price of a stock is close to book value, that's a good buy. That's what Warren Buffett would tell you to do. Go look for stocks with a very, very where the price is close to the book value, and then hold on to it like it's your child, right? You hold on to it for years, and there's nothing but upside. Anyway, if you're
speaking
of
Buffett,
paying for equities, that's the way to buy.
I have my own views on Buffett right now. That whole, was it CNBC that he did that interview talking about banks and backstopping.
Or Bitcoin, which one?
No, he did that interview talking about banks, and he got on, and it just seems so phony. I hadn't seen Warren Buffett talk like that to a news channel for such a long time, but it's like they brought him on to create this sentiment that everything in the banking industry was okay.
Yeah.
And
Well,
I was like, why is Buffett doing this? What's his
why?
motive? And then I remembered
he's toeing the line because, he's managing, I don't know how many billions of dollars now in his fund, but he doesn't want he doesn't want banks to fail.
Well, I think
he doesn't want the
unless his
economy to
position's
tank.
changed. I know his holdings in Bank of America are enormous.
Yeah, he doesn't want banks to
enormous.
fail.
Yeah, so it's like if I own a ton of stock, of course I'm going to get on the news and tell people like everything's fine. Don't pull your money out of the banking. Like,
Nothing to see here, folks.
Yeah, right. So you got to be careful, guys, watching the news. That it's just everyone's got a motive. Everyone, I was actually talking to Catherine last night about this, Todd. We were talking about investments, right? And like the motivation that people have when they're giving you advice. Our goal here at the Trader Pulse is to give you just the news and our advice without any bias, without any like internal bias. And if we have one, we'll try to disclose it. We'll try to like let you know, like, look, I do kind of have a bias here. I have been shorting banks, right? And I've said that. I've been saying like, I right now I'm not in a position shorting banks, but like I have been. And so that might create a bias. But if you got a real estate agent, for example, coming over and they're, you're asking them like, hey, should I buy a house right now? What do you think a real estate agent's going to say to you?
Yeah.
Well, the market's great. Haven't you seen what's going on? They're not going to give you an unbiased opinion like we're going to give you, right? And so you really have to be careful where you're taking your news in from, your info when you trade, because even people on some of the largest networks, when they bring someone on, they're usually invested in the thing they're talking about. And so they're going to have a bias because the bias benefits them if they can get the general public to buy in.
Yeah.
It used to be legal, by the way. I don't know why that changed, but
everybody's selling their own book.
Yeah, that's right. All right, Todd, let's move on. I want to spend the next 15 minutes going into this AI. We haven't done this very much. And I just, at the end, I feel like it's the highlight reel of what we do. But I thought it'd be fun to go back into our AI agent that we deployed and give you guys some updates on some stuff that's happened. Like just mind-blowing stuff that in the last, I told people this was going to happen, but the AI industry is catching up. We deployed this 2 weeks ago, and there's already competition that's come in within the last week that like the general public's going to have access to on a massive scale. So do you want me to bring that up, or do you want to bring that up?
I can bring it up. I got it ready. In fact, I was just going to point out that, let me just share it with you real quick, Matt. Oh, you've got it. You've got the screen.
Oh, let me give it back. There you go.
Yeah, so I was curious this morning. Can you see that okay?
Yeah, so, no, it's great.
I was in a hurry to get an answer. I was really curious to find out what the average response was for non-farm payrolls for the past 6 months. I was interested to find out what kind of movement range is average, up or down. What does that gap look like from the time the announcement comes out to where, say 30 minutes later? And so I asked it. So I put in the question during the first 30, let's go to the very top here. Open a browser and go to forexfactory.com and find out what the average movement in pips that the Euro USD moves during the first 30 minutes after the non-farm payrolls report is announced for the past 6 months.
Brilliant. I would never thought to do that.
As a little clue, you want long sentences. You don't want to put periods in here. You want to let the AI know that this is all part of the same goal. You can use commas, but try to make one big long sentence to explain as much detail as you can give it. You'll get a better result that way. So it went out and it scraped. It went out on the web and it scraped all the data from the Forex factory, and it came back with this reply. After analyzing the data for the past 6 months, the average movement in pips of the Euro USD during the first 30 minutes after the non-farm payrolls report announcement is approximately 50 pips.
Wow.
Task complete. So you can see that the move that was made was only 42 pips or 427 points. So the movement was less than average today based on that big announcement, which is really telling. Very, very interesting. So if you want information, I mean, I could have Googled that and probably got somebody's opinion on what it was, right? In fact, the very first response that it gave me, I think it's way up here. I think the very first response it gave me was, hang on a second.
54.2 is one I just saw.
Well, the first thing it came back was from a reliable source. It's 50 to 70.
Like a single source.
Yeah, I've lost it. So initially it didn't try to go out and analyze it itself. It just tried to grab somebody else's opinion. Then it recycled more questions and went out. And then I finally said, okay, go to Forex Factory. And when I did that, it came back with a lot more solid data because it actually analyzed the data. It found a chart, it analyzed the points, and then it brought back the average for me.
Yeah, this is like amazing. It's brilliant that you did this. I would never have thought to have asked it this, but I'm really seeing this as like, if you're a trader or an investor, you now have an all-powerful employee. You have an employee, we call them agents, but you have an agent who has access to everything. The amount of data going back hundreds of years, even in a single prompt. And what we've developed in our AI, what we deployed here was a task management feature like Todd brought up. I think that it's really important to highlight that it doesn't stop working. Meaning once it thinks it's like a bad employee would, especially the ones that do like a half-assed job, they come in and, when you ask them to clean the room or do a certain thing, some of them are going to come in and just do the least amount of work that they have to do without getting fired. And as an employer, unfortunately, I've dealt with that. You've got really great employees who want to do a good job, give you their best work. And then you have some that are just like, I'm just going to give you just enough so you don't fire me. Well, this doesn't do that. This goes out, it gets the data, and then when it feels, it actually doesn't feel anything. When it pulls in the data, it automatically goes into regen mode and goes, there's got to be a better answer than this. And so it will actually create new subtasks just with this ambition, this brutal ambition to give you the best answers, to give you the most accurate. And even when it's like spot on, it will still question it. It will still go, I've got some criticism around this. We should maybe look at it from this angle, maybe look at this from this angle. And that's what's actually been unlocked in this deployment. I don't know how much I've talked about this, but OpenAI through ChatGPT, and by the way, we changed the name. We got rid of the GPT on our name. There's this, they're trying to fight over this GPT copyright. And so we just didn't want anything to do with it. So we dropped the GPT tag. But this AI, ChatGPT, has just implemented what they're calling their API plugins. And if you have a ChatGPT account, I'd highly recommend that you get on their waiting list for these APIs. But one of our 3 features that make this radically unique, they just solved. And it's the ability to open files, read and write files, and have them make sense. On this web version, you can actually do that. You can send it to a spreadsheet and it will do that. It will read files. It does a decent job. The one that's on ChatGPT that just released, if and when you get through the waiting list, it does that also. Yeah. So they're like weeks behind us, I think. I think in the next couple of weeks, you're going to see web search capability on ChatGPT. I think you're going to see an option to have this task. I call it God mode, but it's this, ability to go through and just crunch. But until then, guys, you've got the tool and access for free here. And gosh, what a financial asset to have something that you could, as simple as this, something doesn't go well in your trading and you've got this massive question, like a big question. You take it to Day Trade AI, you take it to this agent, you take it to this employee that you have now to help go do the work for you. Because a web search, guys, web searches are going to become obsolete. This is why Google's coming out with their API. This is why, is because they're seeing that the game has changed around search. We're not going to use search. In fact, I have asked all my employees, I don't know if you know this, Todd, but over with my partner, Kevin, I actually said, like, hey, we need to have everyone, the first browser that comes up, get rid of your MSN search, your Yahoo search, your Google search. It needs to be ChatGPT.
Yeah.
And I use it 4 or 5 times a day now.
Yeah.
And like it's blown my mind how much it replaced Google.
But have you done this? I've done this a number of times in the past week. I've thought I need to research something. I've gone to Google and I've typed in a query. I get a response back and I'm like, what am I doing?
Yeah.
what am I doing? It's this habit. So I pull up Day Trade AI and go there and ask the question. I've done this a number of times and I get such a better experience. First of all, I don't get any ads, and the replies that come back are specific to the goal that I set, not specific to the advertisers that are paying the most money.
So I
don't know how much longer that's going to happen, right? They're going to figure out a way to get advertising assigned to AI somehow.
Right.
But while it's virgin territory. It's the wild, wild west right now. So
right.
if you're watching this, if you're with us, you need to go check it out. And I don't know, Matt, if you've told everybody how to get there, but it's really easy. You just need to go to greenchart.com. And once you pull up greenchart.com, you'll notice at the top it says Day Trade AI. Click that, and that will pull open the Day Trade AI. Now, you get about 3 minutes of no holds barred.
Right.
And then we're going to ask you to give us your name and your email so we can be in touch with you. That's all we ask, and you can continue to use it for free.
Right.
But we just want to be able to stay in touch with you. And there's some compliance reasons too why we have to get that information.
Yeah, and there are some advances we're planning on building into this that you're going to want to. You just won't be able to cache it on a browser, like your past searches, the access to the most popular.
Right, you need an account to do that.
Yeah, and so that's where we're going with this guy. It'll still be free. We're giving this thing away. I don't think there's any other right way to do that. Yeah. But I mean, as far as a tool goes, this is going to be my new homepage. The only reason I was using ChatGPT was because Auto AI 4, their language model version 4, I had access to there. Guess what? Last night we just deployed 4 on this. So the language model just radically upgraded on this as of last night. So in the last 24 hours, your search results now are way more predictive. Your ability to put your goal in. I mean, I don't know how many of you guys know the difference between 3.5 and 4, but the conscious level is just radically higher. And so it predicts what you're meaning. It like understands what you're asking for as a language model better. So when you put the goal in, it's like, in fact, I would say it's almost twice as good as it was 24 hours ago. So now you can do anything on here.
Scary
sharp. Any type of search.
It's scary sharp.
Yeah, it's brilliant. So should we do one more? We've got 4 minutes. Let's take.
You got another one?
Yeah, I want to
stay up all night. What'd you do?
Oh, dude, you know how it is. Let me give you one, Todd. Let me share one that I shared in an email.
You want me to stop sharing?
Sure. Yeah, you could do that.
Yeah, let's see.
I did one that was really fun the other day, where I gave it a bunch of different tasks. Here we go. So let's see, options trading. Oh, I did a fun one in options trading.
Want to throw that up?
Yeah, let me give you the, yeah, I'm gonna pull it up and I'll just copy and paste this one. But here's a fun one, guys. And this gives you an idea how, like Todd mentioned, you really want to dive in when you do this. So let me pull this up. I'm just going to copy this because this is the big one. And when I found this one, I was like, whoa, we've got something here that I didn't know it was this powerful. Let me pull up my screen. So I've got mine in, I've got my account in, I've also got my own API key in the settings. By the way, if you have an OpenAI account and you want this thing to go into God mode, you can actually put in your own API key in the settings. What the limitation is, I mean, this is still amazing. This is way more amazing than ChatGPT, even as a standalone, even without the key. Like what we're giving away for free is, I would say, probably 6 times what ChatGPT is. And what I'm leveraging when I say that is ChatGPT. You type in a question, it gives you one response, and then it sits and it waits. It's like, well, what now? Tell me what to do, right? It's more of we're getting closer to AGI with this, where it's a agent that generatively creates over and over. It automatically keeps going rather than having to have a manual input.
It creates its own questions, Matt.
Sorry?
It creates its own questions.
You're right. Right. It's self-generating. We are right on the verge of AGI. People are like, oh, ANI, we're getting there. Everything's neutral right now. It requires a user input. No, watch this. It doesn't. And so if you have an OpenAI key, you can put it in here. If you don't, go get one. It's $20 a month. It's worth having. You can put this thing into God mode. Let me just get this here.
You could also put it into devil mode.
I'm going to call this crypto, CRYPTO.
Why do you call it God mode? I'm just curious.
I actually didn't coin that phrase. Someone else did. The true AGI, which is generative intelligence, just for those of you who don't know, self-generative, self-generating. They call it God mode because it's like when you take AI that requires a manual process, and then you take a generative self-generating AI and you compare the two, it's like, oh yeah, this is like the alpha. This is so much greater than this other thing. It's like a 10x. So people are calling it God mode.
Nice.
I wish I had come up with that phrase, but I didn't. So check this out, guys. I put in the AI name crypto, and like Todd said, I got really specific. I just like started going nuts on this thing and telling it to do this crazy thing that I didn't think it could do. So I said, and by the way, I did like 4 iterations to get to this point. The first thing I said is, go find arbitrage opportunities in crypto. And I hit enter. And then it gave me some things. And I was like, oh, it went back in time. I don't want stuff that happened 2 years ago. So then I was like, okay, how could I get it to find relevant ones? I was like, oh, I need to have it scan the prices for today on a website. I need to have it go to a browser. So then I said, go to TradingView, right? Everyone knows about TradingView. It's got tons of crypto listed. Have it do that. And then ensure quotes are within the last 10 minutes. Don't give me stuff that's old. And it might do that, by the way. It might be I call them a bad employee, but it might do some bad employee things the first couple of times. But if you let God mode run, it will just keep optimizing and optimizing. And then I said, include buying and selling suggestions based on live prices. So give me buy and selling suggestions based on these live prices. And then, and I just kept adding based on I just kept building on top of this. On the next one, I added this. I said, and then, I want a list. Give me at least 10 and tell me exactly what to do and make sure that you've got the timestamp. So I just went from arbitrage in crypto to triangular arbitrage in crypto to making sure that it was live and within the last 10 minutes to now give me a list. And guys, you could do this with anything that you're interested in. You want banks, we talked about banks today. Ask it. Say, give me the 10 best banks to buy based on a technical analysis. And I want it based on today's price. And list the top 10. And it'll do that. It's going to do that for you. And it'll give you its logic. It will give you a reason why. But anyways, let's run this. Yes, it's so exciting. And you know what else is fun, Todd? I was watching a demo where someone else was using God mode, but I shouldn't say God mode. They were using Code Interpreter, which is the new API plugin on ChatGPT. And one person was running one and one person was running the other, and they were getting different responses. Both brilliant responses, by the way.
Yeah.
But yeah, it is like every time I do this, I get a different response. And so I'm always interested to see what happened.
Yeah, and then you've made a good point. We need to be careful that everybody realizes that this is for entertainment purposes and for research purposes. But in the end, if you decide to make a trade, you need to do your own research as well.
For sure.
You need to seek out financial advice from a professional if you're going to actually trade against these type of questions.
And our disclosure is right on the front. So you guys know, Todd is like our compliance guru. So anytime he sees that some idiot's going to get on here and make a trade based on something we said, I always see your ears perk up like, oh, wait, don't do that.
No,
I trust you guys that you're reading our disclosures. You're reading the one on the front of our podcast that we do every week. I obviously don't have such an eye for this. Just don't be an idiot. That's my advice. Yeah. Read the disclosure.
There's a disclosure on this too when you first.
Right. It's right at the beginning before you start. Right. Yeah. So check it out, guys. Here it goes. Identified 3 tasks, and it typically breaks it into 3, and then sometimes they'll do 1, 2, or 3 after, depending on what it finds. Let's see what it said. It's going to go to TradingView. It's going to get data from in the last 10 minutes. I like that. It's going to identify triangular arbitrage opportunities from the retrieved data based on the criteria of a return of 2% or more. Should we tell these guys what arbitrage is? That might be helpful, right?
Yeah. What's triangular arbitrage? I've never even heard of that.
Well, it's fun. It's a little more complex, but arbitrage is usually between 2 things that have to do with each other. So like the price of Bitcoin on one broker versus the price of Bitcoin on another is never exactly the same, right? It's like the price of rice on the East Coast versus the price of rice on the West Coast is going to be slightly different. Is it going to be close to the same? Yes. But when there's a gap in price, there's always an opportunity because you can buy one, sell the other, close the gap, and then close the trade. You close it when the price comes back together. That's arbitrage. It's risk-free trading because all you're paying for is the commission. Triangular is where you take another one. You take 3 things that have to do with each other. So it might be currency pairs. It could be cryptocurrencies. It doesn't matter. But you take an additional. So rather than just 2 prices that are related, take 3, and the gap triangulates in terms of like size. It either gets bigger between 3 or smaller. And the triangle sometimes changes shapes and sizes. But it increases the odds of you finding arbitrage doing triangular.
Interesting.
Yeah. So I've asked it to do that. It's going to find it at a return of 2% or more. And then it's going to provide the buying and selling suggestions. So it's going to tell us what to buy. And this will answer your question, Todd. Like what to buy on one, which one to sell, and then which one to buy back. So it's because of the triangle. So you can see, I'm sorry. Oh, so here's the first one. Here's our bad employee. I'm sorry, I can't do that. I'm not supposed to do that. Yeah, well, just keep going. Retrieve live data prices. It gets it. It came back. Let's see if we can find it. Here we go. Check it out. BT, ET to USD, timestamped. Buy BTC with USDT. So that's a coin of the US dollar. It's pegged to the US dollar. And then it says buy ET with Bitcoin and then sell ETH for USDT. And then that was a 2.5% arbitrage opportunity between those three pairs. Another one that happened at 12:35, BTC ADA to USD. So anyways, there's a bunch here, guys. Bunch listed. It's not following my instruction, though. Notice how I said the last 10 minutes. So you can see where we're at in the bar. It's going to keep iterating. It's going to look at that and go, did we accomplish the goal? And obviously it didn't, because it's got a lot to go. So it's still working on it. It found some, but obviously this isn't within the timestamp that I asked it for. So it's thinking. It's had to scan again, more relevant. Now look at this, timestamps off, 2021. This is why, like what Todd said is important, guys. You wouldn't want to make this trade right now because it's based off of 2021's data. Like that would be that'd be trading something that's a couple years old. But it just keeps going and going. We're out of time, but man, isn't this exciting? Look at this. Like just tons of them. No wonder people were making millions in the crypto market. There was tons of arbitrage opportunities in the past years, and we're starting to see that there's still some in existing markets.
Yeah, and not all arbitrage opportunities are short term. You might be able to find longer term ones that you can take advantage of. Because if you're looking at prices in the last 10 minutes, and you got to act pretty quick.
Yeah, agreed. And and I know here's my compliance risk ears coming up, but arbitrage also, just because it shows a 2.5% opportunity, if the cost to make the transaction is higher than the 2%, then you don't have a trade. And that's where arbitrage gets really tricky, is you've got to be able to make the trade fast enough and be able to pay for the trades and still have a net gain, still have a net profit. So the big guys are usually the ones taking advantage of this, but to have over 2%, like you said, Todd, it could be something you can manually do. Yeah. All right, guys, this has been fun, Todd. Thanks for your insight, your input today.
Yeah. It's been an exciting week. Wednesday was fun. This has been great. I'm excited to see what next week's going to look like in the market, Matt.
Yeah. And we're going to be posting this on YouTube. Obviously, hit the like, subscribe. If you guys have any suggestions of what you'd like us to cover, put it in the comments. We're now starting to ramp up, get our videos cleaned up. We've got an editor and a social media guy that's helping us with all this. But if you have things that like, hey, I'd really like to see this next Wednesday, put it in the comments and we'll rank them. And based on like how much we get on certain ones, we'll cover it. And if you're new, since we're just building this channel, if you're starting to put stuff in, it's very likely we'll cover your topics. So put that stuff in the comments below, not on the webinar, but on our YouTube channel.
Yeah. Follow us on YouTube and Twitter.
Yep. And put your comments in there. We'd love to hear your feedback. All right, guys. Thanks. Have a great rest of your day. Have a good weekend. And we'll see you not this time, but Wednesday 9 a.m. or excuse me, Wednesday 7 p.m. or same time, same place next week, Friday 9 a.m. Thanks again, and see you, Todd.
Thanks, everybody. See you, Matt.